pump we've just had to $94,000 in Bitcoin may be just a small fraction of the move that is about to come. No, I'm not talking about global M2 today, but what I am talking about involves this chart right here. It involves assessing some things like OTC desks, balance sheets. It involves looking into the whale activities, and it involves looking deeper into what the smart money is doing right now and what we aren't. And this isn't my opinion. This is all built, as you can see behind me, on data, on facts. And I've got some really good predictions here for Bitcoin that might line up very, very well with some of the charts that you guys know I talk about quite a lot here, particularly around this ascending channel cycle we've seen throughout Bitcoin's history. After this video, I think you'll be in a position where you'll likely know what is to come, because again, the idea is to think like smart money. So make sure you lock in for this video, hit that subscribe button if you aren't already, and with that said, I want to begin first of all by looking here at the relationship between long-term holders and short-term holders. Now, the difference here is long-term holders are guys holding Bitcoin for more than 155 days. So that's like over pretty much around half a year. And then we have guys who are underneath that, so short-term holders. Now, why that's so important is because, as you can see on screen, this really tells us the sentiment in the market. Now, you'll find this quite funny if you've never seen this chart before. And honestly, it is a bit jaw-dropping when you first lay eyes on it, because you can really see the distinction here between the so-called smart money, the long-term holders, the guys who, again, have been buying Bitcoin now for like 5-6 months non-stop, okay? And these guys always sell into Bitcoin pumps. Take back in 2018 over here, have a look at this blue line. These guys were selling. And again, the short-term holders, now, I don't mean any offense by this, it's just the terminology. Dumb holders, right? So retail, you can see them buying, essentially, buying the peak. Now, that key contrast gives us a very good idea into the particular move we're in. Because if you see long-term holders actually buying, that's a good sign that the price of Bitcoin right now is undervalued based on where they see it going in the near future. Let's take a quick look as well into the 2021 run for alts. And what happened here in Bitcoin was the blue line really started falling before finally accumulating again in this dip, before again going up for the second high, whilst again the short-term holders, again the dumb money, so to speak, us, unfortunately is what we're classified as, retail, maybe is a better term to use, of course, were buying when they were selling, right? And so looking in terms of where we are right now, while long-term holders, they are buying, and they're buying a lot right now. And guess what short-term holders are doing? They're selling. So this tells me long-term holders are gearing up. Smart money, in a way, are gearing up for a much larger move to come. Now, that's one aspect of assessing smart and dumb money, right? But we also do have a different perspective as well, looking into retail versus larger holders. So forget about the retail for a second here. Looking into the larger investors, they've been buying profusely ever since back here at Bitcoin at $63,000, all the way up to where we are right now. To me, it seems like smart money in different aspects, long-term holders and also the whales, are buying right now. They're confident in the market. They're confident things will get better. And you can look at this chart all day, every day, and find every kind of distinction possible if you go look further enough back. Very quick reversal here kind of does remind me a little bit of what it was like back over here right before the massive run. Where I want to take things now is adoption, because we know that this is the adoption bull run. This is where Bitcoin goes from this like nascent asset class, pretty much as an extension of a stock, now into likely an alternative to gold, digital gold essentially. And that's thanks to what you're seeing on your screen here. Very little negative news. This cycle's had nothing but positive news, and a lot of it's got to do with institutional adoption. Adoption based on ETFs, governments, and of course being infused within many different businesses. Now, we've had some massive news as of today. As Pomp says here, 21, a new public company was announced this morning. It will hold more than 42,000 Bitcoin. And when you compare that with Sailor's, like 500,000, it's not much. But when you hear what these guys are doing, it changes the game. Now, these guys are planning on making financial products built on and for Bitcoin. Like they say here, they intend to develop a corporate architecture capable of supporting financial products built with and on Bitcoin. This includes lending models and capital market instruments. As they say here, they'll even be buying back Bitcoin on the open market to increase something called their Bitcoin per share, which is the amount of Bitcoin each share represents, reflecting shareholder ownership rather than earnings per share like with the fiat model. But wait, it does get better because they're also introducing something here called the Bitcoin return rate, which is the rate at which the BPS grows over time, denominating the company's performance in terms of Bitcoin rather than fiat. Now, it can get quite complicated. It's kind of like a yield product. I had to actually ask ChatGPT to spell it out in layman's terms for me. Essentially, the way that this is going to kind of work is that as the Bitcoin that they acquire through their DeFi products like lending platforms and also other money market platforms, and they end up going and buying more Bitcoin on the open market, which, by the way, is going to be happening with one of their major shareholders, which actually is Tether. So these guys are known for buying a lot of Bitcoin up, all in big chunks. So they'll buy up Bitcoin in big chunks, and then 21 will get that Bitcoin from Tether and give them back the appropriate amount. So as they turn this 42,000 Bitcoin into more and more and more, it essentially makes that your shares in their company, the XXI, stock, more valuable relative to Bitcoin. So when you eventually cash out, it'll kind of work a bit like yield. You'll get more Bitcoin back, essentially. If you ask me, it's an awesome thing for us crypto holders because not only are they going to be buying Bitcoin on the open market, but they're creating financial products that use Bitcoin for borrowing, lending, and money market funds that will absorb Bitcoin out of the market in real time, which means we are bordering on a massive supply shock. These guys are creating a new paradigm for Bitcoin. They're a company solely designed to buy Bitcoin on the open market, which shoots the price up. That is massive. But what I'm going to show you here in a second is this chart. Now, when this blue line goes to zero, it's getting very close to that right now. But what's going to happen is we're not only going to have this 21 company buying Bitcoin on the open market, what we're going to have is something we haven't seen before, which is institutions, governments, therefore sovereign wealth funds. We're going to have mutual funds. We're going to have BlackRock, Fidelity, everyone buying Bitcoin on the open market. Until now, everyone's been buying it behind the scenes in secret deals. You give me some Bitcoin, I'll give you some cash. Doesn't impact the market. When that blue line hits zero, all hell's going to break loose. But first, there is more. As we know, Saylor's been buying. Saylor does not stop buying, right? Which is a very good thing. So this guy bought, $555 million worth of Bitcoin at $84,000. You can see right here. So they acquired 6,500 more BTC, bringing their new total to 538,000 with an average cost of $67,000. So the reason why I quickly prefaced what I'm about to say with MicroStrategy is because we all know about Michael Saylor and how he buys a lot of Bitcoin. What some people may not know is he doesn't buy that Bitcoin on the open market. If he buys it on the open market, meaning he buys it via Coinbase or Binance, of course, if he buys 10,000 Bitcoin, it's going to shoot the price of Bitcoin up quite a lot. Instantly as well. Now, what happens is that if you do this and people are buying and selling in large chunks, it's going to throw the price of Bitcoin around. So there's these things called OTC deals, or over-the-counter deals. And what that looks like is if Michael Saylor wants to buy 10,000 Bitcoin and he has a bunch of cash, he will go to Coinbase privately and say, Coinbase, I've got a bunch of cash. You've got your 10,000 Bitcoin. Can we work out a fair price for that Bitcoin? I'll give you the cash privately. You transfer the Bitcoin directly to me. Everyone's happy. The market isn't thrown into mayhem because I'm buying a bunch of Bitcoin. And this happens a lot, all the time with these institutions and governments and private investors. They all do it because that, of course, prevents massive price fluctuations. Now, why I had to say all of that is because very soon, at least likely to happen, very soon, as this chart shows behind me, what we're about to experience here is the OTC balance sheet going to zero. If that goes to zero or near enough to zero, everyone is going to have to buy Bitcoin on the open market. Now, one of two things likely happen at that point. The OTC desks, who again have this as their balance sheet, will likely go, we're going to start buying Bitcoin up every single week or a much more frequent basis to be able to supply these big OTC deals. Who cares? Because obviously they're buying Bitcoin on the open market. Number two is that they don't do that, which I doubt. And we have all these institutions, governments, and large investors going, well, we got to now buy Bitcoin on the open market. Now, I don't have to give anyone an economics lesson on this, but obviously that's a massive supply shock inbound, okay? Because the adoption for Bitcoin, as I mentioned, is only increasing. And this chart shows the same thing. Accumulator address demand has rocketed since Bitcoin's been around here. You can literally see it's gone parabolic. It's dwarfed any other time in Bitcoin's entire history. So with that, and of course the OTC desks running dry very, very quickly here, there's a simple supply and demand scenario playing out where we have guys with billions and trillions of dollars ready to come in the space and spend some of that, and we don't have any supply to give them, at least supply that doesn't impact the price. So we're looking quite good. And I see this obviously having similar pumps to like back in 2017. This very well could be a situation we go into a massive blow off top. Now, that's great for positive price action, but it could also be a negative because just as OTC deals are good for keeping, some of the bigger moves in check on the upside, it also prevents some of the big sell-offs as well. So there could be, on the slightest bit of FUD, massive sell-offs. But if you combine this with the 1.2 million Bitcoin in the ETFs right now, then if you compare retail demand from us in crypto with the traditional retail ETF holder interest, plus also the governments, institutions, and again, just large whales buying hopefully soon via Bitcoin on exchanges or maybe even buying on the ETFs, then we have a perfect combination of a true massive supply crunch here. All right. This is going to be, I think, the child, the baby of this. This has spawned what we're talking about now because there is so much institutional and national interest in Bitcoin thanks to all the insane updates we've had. Now might actually be the time, well, very soon anyway, where we start to see that supply crunch come in from every direction. We also have people taking their Bitcoin off exchanges. The outflows are well and truly exceeding the inflows. And cumulatively, you can see the exchange reserve is hitting lows. I believe all-time lows, but at least in the last 3 years anyway. So you combine all these things, guys, something's coming. Something is going to happen. And you can just see the rate of accumulation, right? These are accumulation addresses. It is ramping up, guys. Something big is coming. We're also at record highs right now for all the Bitcoin held via ETFs. About 1.2 million Bitcoin is held right now. We've had one of the largest inflow days since January as well. There's a lot of interest coming back. And what's also happening is even retail are sending all of their Bitcoin off exchanges. This is typically bullish because that means they're self-custodying. Right now, the only way to sell your Bitcoin is via an exchange. So when this line is in the green, all right, that means that they're looking to sell likely. And when it's red, they're holding. And overall, exchange reserves, just like the OTC reserves, are falling at a rapid rate. They're at all-time lows by a long shot. So I have to ask you this question. We've got so much increase in interest. A lot of it is never really seen in terms of Bitcoin's price because of the OTC desks, because of the fact that there's so many over-the-counter trades happening in the intention of not moving Bitcoin's price. What happens when that goes to zero or near enough to zero, where the OTC desks have to constantly buy Bitcoin on the open market, or if that doesn't happen and there's too much demand, institutions and governments and large whales, what happens when they start buying on exchanges? I mean, just think about it. Bitcoin over here predicted many times over the course of this cycle, roughly where price will go to. Okay, and one of his recent predictions is pushing to $145,000. Now, if you ask me, this move we've seen just now in Bitcoin's price looks a lot like this move over here. And in saying that, I do think that we're likely going to retest the 50, likely 100 or 200-day moving averages, which is this red line, and then we'll likely see a proper bounce like we saw back over here. Likely even we could see something like this where it's a clean break. Okay, a bit of a slowdown initially like we're experiencing right now, and then a continuation. It does depend on the macro. It does depend on other factors other than just simply, the breaking of the downtrend. But I'm mentioning this because I do think we'll likely see in either case the eventual move up here to the top of the ascending channel, which is my own personal theory, going as far as to look at each and every single Bitcoin cycle and the fact that we have these same ascending channels while Bitcoin consolidates in an upward trend before it breaks the upper trend and then goes into an alt season in green here. Now, don't get it wrong. This green, box, Bitcoin's going through the roof. Bitcoin's going crazy, but alts actually take charge at this time. And I can show you that with proof because Bitcoin dominance falls as soon as Bitcoin breaks the upper trend. So that's what I'm personally looking for here. This is back in 2017. This is back in 2020, 2021. The same thing happened if I toggle back Bitcoin dominance. Not long after it broke through here, it fell. Okay, again, leading to alt season. Going back to this chart, I do think that going to $143,000 to $145,000 will put us right on track. Now, why I've got touch point 4 and touch point 5 here is because I think there is a situation where we have a touch point 4, like in 2017, then we come back down again, and then we go into a touch point 5 before going up, okay? Which I mean, would roughly speaking put us in around about September of this year. Now, if you believe that we're going to have an alt season in September, or at least Q3, Q4 of this year, that would line up perfectly. The only thing I must mention is that we will likely see Bitcoin's dominance continue to gain until it breaks out of this channel in which it will fall to altcoins. I think alt season's going to blow people away, and it has to in order for Bitcoin dominance to really fall while Bitcoin goes up. And I think all that being said, once we have the institutional adoption in, that may be a huge catalyst here to break out of the channel and to actually cause alt season. And all of this really is lining up here with the 26.5-year S&P cycle, in which we see the same patterns play out towards the end of this cycle. This massive run-up we've experienced, we normally see around about a 20% crash like we've had now. We see this kind of recovery, and then we go into like the last euphoric push, which could be 70% like the last cycle, which was a dot-com bubble, or 80% or something, but what will come from that is likely a drop in the 50s of percentages. Now, I've covered this a little bit, and I will talk about this more. You can see it's actually drawn out here for the dot-com bubble, and that's one thing I'll finalize on is I do think this will be the dot-com bubble. I think institutions will come rushing in. I think we'll have these ETFs for all our various altcoins, coming to life, and that's, I think, definitely going to happen because of the regulatory easing for crypto in the United States. A lot to be excited for here. It's all happening behind the scenes, and I think the stats on the whales really does go to prove that. Okay, they're buying a lot, and OTC desks, they can't handle it much longer. Thanks so much for watching, guys. Drop a like down there if you made it this far into the video, and I'll talk to you very, very soon. Bye-bye.